Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets have opened up mixed. We're seeing Taiwan index that's managing to hold on to gains of 0.8 to 0.9%.
Quietly hopeful that the second quarter has maintained the momentum that we saw in the first quarter.
GIFT Nifty indicating a 20-odd point lower kind of a start.
I believe in merit-based immigration.
In capex terms, somewhere between $25 to $30 billion minimum per year over the next decade.
Positive 25,240. The Nifty Bank is trying to find its feet, about absolutely flat actually.
Thawing of relationship is the catalyst number one, which can lead the risk premium in India to get lower.
Our focus is on innovation, development, bringing new wall panels into the Indian market.
In the red now for the third consecutive session, the Nifty has breached yesterday's intraday low.
Down about 0.6 almost, 88.80 compared to about 88.31. Which was the Monday close.
The last few minutes have been good for the bulls. An impressive recovery from the lows of the day.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Nigel D'Souza. And Nigel, as we speak, there has been a bit of a recovery, right?
Yeah.
The low today was sub 25,100. 25,084, I think. That was the intraday low. So from that level, we've seen a pullback of close to about 120 odd points. I guess we thank the Nifty weekly expiry.
Well, that's right. Nifty weekly expiry in the Nifty Bank, the largest constituent of the index, that's up close to 450 points from the low point of the day. So that's the kind of recovery I've seen on the Nifty Bank. The intraday chart comes up for you. And I'll tell you what, portfolios will be feeling relatively better because, when I was on HDR, Reema had finished TH at that point of time, trading hour and half-time report. The markets actually were the low point of the day. The breadth of the market, the number of stocks advancing actually had fallen to sub 1,000 stocks. Now that number has gradually crept up to around 1,250 odd. So the crisscross lines come up for you on the screen. So your portfolios will be feeling good. At today's low, you're only around 900 stocks that are advancing. So some kind of improvement, Reema, in the breadth of the market as well.
Indeed. So leadership is coming from banks. In fact, look at the PSU banking index. That's up over 1%. Metals are doing well. And autos have been strong since morning. Though on the way down, you've got softness in IT and FMCG. But we've got an action-packed 1 hour, final hour coming up on Closing Bell. So markets are holding above 25,200, held up by autos, PSU banks and metals. But it seems to be a down day for consumption pack. Tata Motors is in focus following news of JLR extending that production pause. Cybersecurity wars are plaguing operations of steel counters and JLR is on account of the cybersecurity, but steel counters are extending gains as the street bases for price hikes over the coming weeks. Brokerage firm Nomura sees a spike of 5% above spot levels. Details coming up on the show. The Indian rupee has scaled a fresh all-time low of 88.8 against the dollar. What's triggering the move on the currency? We'll also discuss that on our show. But right now, let's go across to Nimesh. He is with Abhinav Bharti, the head of India Equity Capital Markets at JP Morgan, and they will join in from the sidelines of the 10th JP Morgan Annual India Conference.
Thanks, Reema. Interesting times, right? We are hearing so many IPOs and blocks and fundraising. And I have with me the man who is actually instrumental in so many of those such deals. So Abhinav is the head of ECM at JP Morgan. Abhinav, thanks for joining in. Seems to be in a hot seat, right? I mean, there's so much of fundraising, so much of blocks happening. What's been the trend like, and what sort of pipeline that you're envisaging from here?
So from a trend line perspective, if you really look at it, numbers sound very large. This year till date, we have done about $42 to $43 billion in total capital raise, roughly about $10, $11 billion in IPOs, and the balance in follow-ons and blocks. If you were to just extend this trend line for the full year, it'll be somewhere between $55 to $60 billion that we will raise. Compare that, I think this is the second largest capital market volumes that we have seen in India, just behind 2024. So yes, the numbers look large, but really if you look at it from the other perspective, which is the India's market capitalization has also grown quite substantially in the last 5-10 years. And if you really look at it from a percentage of market cap basis, then these numbers are very much in line. It surmounts to about 1.2, 1.3%, which is not something which is out of ordinary, I would say, going by past precedents. So clearly, I think the overall growth of the market means that capital market volumes that we will do on IPOs and blocks follow-ons will increase. It's just a sign of a healthy market is how I would put it. Where we stand right now is, in my view, I think going into the last quarter of this year, I think you will see a more IPO-heavy calendar. I'm sure you guys are picking up as well across multiple companies which have filed or which were filed and now have got SEBI approvals to go for the final pricing and listing. But yeah, overall for the year as a whole, it's a good trend line that we expect to continue for into the next year.
Sure. So let me break into various segments. I'll start with the IPOs first. 50 odd IPOs, only 10% below the IPO price. So in a way, it's a good track record as far as the IPOs are concerned. Yes. You also have been involved at JPM in some large deals like Hyundai and Swiggy and many more. In terms of valuations, as a banker, do you find it challenging to get these kind of valuations for many of these IPOs, or do you think the valuation is still fair compared to what it is for the listed market?
So if you look at it compared to the listed market, and let's just take the data points for the last 12 months. I mean, I'll go back to our conference same time last year versus now, and effectively, IPO as an asset class has given close to about 29% weighted average return. Right. So if somebody were to invest in every single IPO that has come to the market, I'm taking above $100 million as the cutoff, then you would have made about 29% return. If you compare that to the normal market or the secondary market, that's actually been flat or maybe just about 5% up. So the fact is that IPO as an asset class has given return. And the corollary is that from a valuation perspective, at least at the time of the IPO, these were priced to what I would say where the investors were comfortable coming into those deals. To me, I think the clear marker or support for next stage of IPOs is going to be what the current class of IPOs is delivering to the investors. As long as that is doing well, you will continue to see the product to be healthy.
Abhinav will deep dive more into IPOs, but you know the other big trend has been the PE exits and the promoter exits. Yes. You have been involved in many blocks as well.
Indeed.
Is there a bit of a worry that there is so much of exits happening, promoters selling out, PE selling out? How do you read that trend from an India perspective?
Nothing that is again what I would say which is worrisome or anything. Simply because look, private equity has actually even deployed capital at an equal pace. Like what I call it as we are into the third phase of deployment, exit, harvesting and exit cycle that we have seen for private equity. They have obviously been significant provider of capital in the Indian ecosystem over the last 20 plus years. It's their business model, and I would say you would continue to see that. A lot of new funds that they are raising are focused 30 to 40% to be deployed in the Indian markets in the next 5 years. So I think we will see this as a natural course of cycle. I think the promoters part is interesting, but a lot of it is actually where promoters are utilizing that capital for other needs. So it's important to differentiate between where the capital is being raised in order to deploy for other growth measures versus just taking capital out. And I would argue that that last part is a very small component eventually if you look at the entire scheme of things.
The other big trend that we've noticed, at least in the last couple of years, is the MNCs looking to sell or pare down the stakes in the Indian subsidiary. I was listening to the Whirlpool global CEO saying it's a valuation arbitrage that they're playing out, especially in India. You see that trend to only pick up from here. A lot of other deals will happen. For example, there is it's a media report which is well stated that Whirlpool wants to sell another 31%. So, is that going to be a trend that a lot of MNCs will look to exit?
So, the trend around the fact that cross-border or global companies want to, utilize Indian capital markets strategically to raise capital and to list their companies is something that is going to pick up. And I think from Indian capital markets perspective, especially where we as individuals are now deploying capital into equity markets, I think that provides access to some very fantastic high quality businesses that were otherwise not available earlier. Now, the question, of course, is that what are the MNCs thinking and how are they going about? Why is suddenly such a craze? Part of it is valuation, of course. Yes, the valuation in India is at a pretty decent level. But equally, I would argue it is also on a relative basis. And when you sit at a global corporate, you are actually as a CFO thinking about, if I have to fund myself through raising debt, raising equity, where my cost of capital is the highest. Cost of debt has gone up in the developed world, as we have seen, especially in the last 3 to 4 years. From that perspective, the valuations at which India trades does make it more attractive. But again, the fact is that these companies are really high quality models that are coming to the market. So in my view, I would say it is net a win-win outcome. Yes, there are certain examples of companies or MNCs where they are exiting fully. But more often than not, if you really look at it, a lot of them are saying that, yes, we want to list, but we want to list only a part of it such that we keep control. Hyundai that you referred to, they made it that very clear. A number of other companies which have done blocks, they're saying that, look, we will continue to be at a 51% mark, which means that the global corporate still wants to see, number one, see a long-term benefit in being in India and want to stay in control.
Sure. Abhinav, coming back to the IPO market, the kind of quality of paper that we are seeing hitting the market, any worries that the quality of paper is not that great, or are we at the fag end of that frenzy of being fundraising? Where are we in that cycle?
I would say we are in the early to middle part of that cycle, nowhere close to the frenzy stage at all. And I would drive it on the basis that, look, if you go back to 2021 era, the oft-repeated point is that a number of companies that came to the market at that time did not had the business models fully laid out or fully, scrutinized by the market. The business models, or they were not completely on the profitability curve. I think as you will see for IPOs this year, they are either coming for companies that are very well established, or even in the new age segment that we are all very excited about, these are business models that have actually achieved profitability. So in other words, the business models have become a lot more, deep-rooted and grounded. In my view, the quality of paper coming out right now in India is actually much better than what we have seen in previous cycles.
Okay. While we talk about IPOs, most of them have been FPOs. The money is really not coming into the company.
Yes.
Is that something as a banker you will be worried about? And how do investors choose between an IPO and an FPO?
Yes. So I would say it is actually a lot more driven by, from an investor perspective, look, they will be more than happy to give more primary capital. Equally, our market has also evolved wherein the scrutiny on primary being raised by the company and where it is being utilized has been very high.
Sure.
So from that perspective, a lot of corporates actually have become a much focused custodian of what I would say as primary capital into the business, that they want to raise only the amount wherein the returns of capital remains high. The point that we miss out, I would argue, when we do these valuation discussions with investors, the Indian domestic investors in particular, while everyone loves growth, everyone loves profitability, but they also focus a lot on return on capital metrics, which I think is a very important aspect for the Indian market.
Sure. Abhinav, thank you very much for joining us. I know we have a lot to ask you, but we're running short of time. Guys, that was Abhinav. He still believes that we're in the, at least, beginning of the middle phase of this IPO frenzy.
Okay, that's a nice way to summarize it. Thank you, Nimesh, for that. We will get into a break. On the other side, we'll get chatting with Aditya Sood of InCred Asset Management. Stay tuned.
Welcome back. The market's along the flat line. Breadth of the market still in favor of the number of stocks that are declining. KNR Constructions, they get an EPC contract worth around 460 crore rupees for multi-level flyovers and road development in Telangana. And some of these, order wins are being met with good amount of, boost up. KEC in the morning was up and about. KNR Constructions as well. I recall HCC as well. So the orders are triggering in. And in fact, the street is quite optimistic on prospects from here on. KEC, in fact, after giving a heads up, yet the stock reacted positively. Well, moving on then, let's find out how do you trade the index. Mitesh Thakkar from Bonanza Portfolio joins us on the show. Mitesh, we're getting into the weekly expiry hour, the last half hour or so. Good recovery from the day's low, right?
Well, I think, in fact, today morning I was saying that if 25,150 kind of holds, it should be good. We actually went much below that and have managed to recover. So that's a positive sign. I think not closing below 25,150, 130 would be a positive. And I think the markets can again, recapture and up more if this breakdown doesn't happen. On the stock side, banking names are buzzing. So I have a buy on IndusInd Bank. It needs to clear today's high, 757.6 is the high, so we take a conditional buy about 760. Keep a stop at about 749, look for targets of 785. That's the first call. The second call, which I have, that's a buy on LIC Housing Finance. That's another stock which after rally has given a pullback, is at support area. So giving you a good entry point. Buy here with a stop at 577, look for targets of around 596.
Any level, Mitesh, on the Nifty Bank?
On the Nifty Bank, I would look at the first target of around 55,800. Now, this was the level which the Nifty Bank had made a high on the 18th of September. But the eventual targets are closer to about 56,000 to begin with. And in a good case scenario, I think even 56,400 is what is possible.
Okay. Thank you. We'll connect with you in the last 30 minutes. For now, let's talk about Tata Motors. Now, that's in focus on the back of a cyber incident that the company reported in August. Sudarshan is here with the details. Sudarshan.
So cyber attack and its impact on JLR. So pause, and the pause again. That's the story of JLR over last 3 weeks. So on August 31st, for the first time, it was announced that JLR's production was shut due to cyber attack. And after that, the next release came from the company on September 2, in which company has talked about this cyber attack and saying that it's working on to restart the operations. But after again, another update comes on September 10, in which company said that it was working with cybersecurity specialists to restart the operations. And for the first time, it mentioned that some data was also impacted in this cyber incident. Next update came on September 16, in which company has extended the production pause till September 24. And that time also it said that it's working with a forensic team to restart the operations. Today, another update company has released. Now, the pause is extended till October 1, and it's saying that it's looking to restart the operations in a phased manner. This is what company has said. But what about the news agencies? So BBC has reported that due to production pause, JLR is likely to be impacted by almost £5 million per day. And this cyber attack has come at the worst time because after recently UK government had made some policy changes, and because of that, September was very important month. Telegraph has reported that even if company has extended the production pause till October, but it believes that production pause may be extended till November. Now, why all these things are very important for Tata Motors? Because JLR contributes almost 70% to its total consolidated revenue. So we'll have to see how much time more JLR takes to start its production.
Okay, all right. Thanks a lot, Sud, for joining in and giving us that quick input on Tata Motors. Well, let's welcome Aditya Sood, Fund Manager, Incred Asset Management, who joins us on the show. Hi, Aditya. Good afternoon. Good to see you. When autos, everyone's revving up the engine. How are you all approaching that theme? Is it the core OEMs? Is it the auto ancillaries? Or is there some other way you're playing it?
So as you rightly mentioned, there are three ways you can play it. Possibly, you just miss the dealerships, basically. So we are very well aligned to auto OEs. Obviously, that includes Maruti and Hero Honda. We like both the stocks. I think so. The underlying theme here also seems to be the pay commission, as in when it comes. Obviously, that is going to be a 4.5 lakh crore sort of a number that flows down. What we have seen is that, typically in a pay commission year, all the consumption categories do, reasonably well. So whether it is two-wheelers or small cars, or the ancillary companies as well. And that includes, some of the companies which are doing or which are pivoting from, doing auto ancillary and now pivoting towards, essentially doing high precision components. So that is a theme that we like. And dealerships, obviously, there are two plays, which is Landmark and Popular Vehicles.
Do you own Landmark and Popular Vehicles?
Popular we do own, because we want to be aligned to Maruti. We believe that the pipeline is very, very strong. The stock was got IPO'd, it made a low of 80 rupees very recently, got listed at a 2,500 crore market capitalization. I think so. What we like here is that, they made a very interesting pivot towards service income, which is a very, very high return on capital business. And obviously, last 12 months have been very, very tepid. Possibly they were losing money by clearing the inventory, and inventory is not, it doesn't become, 90 cents to a dollar in this business. Possibly it becomes, 95 cents to a dollar. So we like their consolidation play. They are, trying to consolidate the industry. Recently, they acquired a dealership in Telangana, which will add, a lot of revenue, and growth is something that the street has been trying to figure out. But we believe that possibly in 2027, growth is going to be, back with the bank. Possibly, they'll end up having a 20 to 25% growth because of it is going to be a combination of inorganic, organic plus pay commission, as I, sort of outlined.
Its issue price was 295, right? Closer to 300. So it's hard from that level.
Yeah, so that is where, a lot of these IPOs become very, very interesting, to us, wherein they become, possibly value buys at some point in time. It is a company that does 5,200 crore market revenue. It was trading at, 700 crore market cap. I know that, it is a small cap, but, that is where we become, slightly agnostic in terms of, buying value plays.
And just one more word about Populars. When it came out with the IPO, you said services was about 15% of their revenues. The after-sales market and services. Now, what does it stand at?
So it is similar, the only thing here is that, it is growing at 25% CAGR. So a lot of emphasis post the private equity player, which happens to be Banyan Tree in this case, to grow the service income. So there was a deliberate effort. But what also needs to be noted is that, this is a 100-year-old dealership business, in Kerala, and now they are moving out of Kerala. So they've got great reputation. And Maruti car, typically, the service is like 4,700 rupees, 2.2 services to be very precise, in a year, essentially. So our view is that, they are very, very competitive if you compare it to the mom and pop sort of, service, shops. So this is what we like about them. Obviously, it will continue to be a higher margin trajectory for them over a period of time. So in the previous cycle, they peaked at 5 to 6% EBITDA margin. I think so they would be at a much, much higher ROC number going forward.
Okay, all right. Aditya, anything new you'll have bought in the last, since the last time we spoke on the last couple of months or so? A new idea, you've told us in the past, about Tejas Networks. You believe there's a longer term potential out there. I think we've spoken about Indra Prasad as well. That's the hospital chain. Anything new?
So, Nigel, to be very frank and honest, one of our, views is that you buy great companies, when they are going through this 3-year period of zero return. So we have just invested into a company known as Ethos, which is the largest luxury watch retailer. They did a, fundraise on Ethos Lifestyle. We believe that luxury is a theme, which is a multi-year theme. We are just starting that theme. If you look at the Ethos stock price, they have just, stagnated for last 2.5 years. The stock has delivered zero return. What is underlining here is that, obviously they've got, the watches have got, great pricing power. Currency has really hurt them, which is a Swiss franc to the, essentially rupee. which is, incidentally catapult to, 112. The Indian currency has taken a knock. They are in the process of, sort of passing of all the, price hikes. I think so next 2 quarters will be done. Same store growth is very, very strong. It is possibly trending at, closer to 15%. The growth is like, closer to 25%. Or we like the bottom up sort of a story, which is low unit consumption. So I think so ethos with a very strong franchisee, diversifying into the lifestyle brands in India could be a multi-decade play going forward. A very, very simple way to play luxury in India.
Got that. Ethos, when we last spoke to you in August, it was, when the heat of the 50% tariff was being felt on shrimp makers and textile makers. And you always look for value wherever stocks have fallen considerably. And at that point, you said that we'll, analyze it. How are the stocks looking? Have you made any purchases in either textile names or in the shrimp manufacturers?
We have not, but we continue to monitor this space very closely. The only thing is that, I think so the market is, and stocks have, both these pockets have moved up considerably. I think so the market is trying to preempt a trade deal here. But we believe that, there is going to be some period of distress, and that is why, we have not built a position till now. I think so there is going to be, at least in the textile space, I think so this is very, very clear that this is going to lead to multiple opportunities in terms of M&A. Obviously, a lot of listed players know how to switch on and switch off. We have been talking to some of the unorganized players here. I think so the pain is going to be immense. At least it is going to last for another 6 months. I think so next quarter is very, very critical. We are expecting a trade deal to happen, between November and December. There is an element of pre-shipment which has gone through in terms of textile. Another thing that we are monitoring very closely in a lot of these textile players is that whether they are in a position to, develop a alternative base. Like, for example, Gokudas has got something in, essentially Africa. So we are trying to, just figure out that, whether they can significantly ramp up. Obviously, it is not going to happen overnight, but I expect a lot of consolidation in the sector to happen. Now, in shrimps, it cannot happen by the structure of the industry where we are. But I think so Indian shrimp is still very, very competitive. And if there is a tariff deal, which is closer to 25%, obviously a lot of these shrimp stocks should also do well. Avanti is a clear-cut winner to my mind there.
Great conversation. Aditya, thank you very much for joining us today. Let's talk about one more sector which is doing very well, metals. Nigel has now moved over to the big wall to tell us what's driving this excitement in the stock and what are the triggers as we look ahead.
Well, metals are shining and there could be a sparkle in the coming weeks as well. Let's break it down for you. Hot rolled coil is trading at an 8% discount to China parity and 3% below the FTA parity. And so Nomura forecasts steel prices could rise by around 5% above the current levels in the second half of FY26. Point number 2, demand tailwinds, well, they are flowing in favor. You're in China, you have October normally marks the start of a seasonal demand rebound, while in India, a restocking cycle is expected to boost demand significantly. There have been some structural shifts as well at play. And in India, the safeguard duties, well, they have been extended for 3 years. And the GST cuts on key categories, that's what could spur demand growth as well. While in China, a move towards anti-involution, which is quality over quantity, that's gaining momentum. Point number 4. In fact, in China's, in case of China's output cuts, they are turning up the heat. Now, from January to July, if you look at it, in this year, China's crude steel production, well, that dropped by around 2% year on year. But things could get even more aggressive from here on. Nomura, for one, they are projecting a 9% cut in output for August to December 2025, as Beijing, well, they have mandated a 5% cut in the total output, which could come to around 50 million tons odd. And point number 5, the stimulus watch. All eyes are on October. Markets are hoping for a property-focused stimulus from China, and the street is keenly watching out for the 4th preliminary session that's due in October. In fact, we'll have to hear something, otherwise, the hopes could fade away. And point number 6, the Indian ferrous market is rock solid. Steel production and consumption, both of them are growing at high single-digit pace. And since the safeguard announcement has come in, the net imports as well have dropped by close to around 50%. So those are all the factors at play, and keep an eye out come, October or maybe the end of September, we could be bracing for a price increase in steel. Back to you.
Okay, interesting. Thank you very much for that. Get into a break. On the other side, we'll get you a check of what dealing rooms are saying in our segment D Street Chatter. Also, BTST calls coming up next. Welcome back. Midcaps are underperforming today. Midcap index is down about 1/3 of a percentage point, but you're still beneath the surface of lots of movers, which are lighting up the screens on the way up and on the way down. Hormus is here with more. Hormus.
Mostly on the way up, of course, in the broader markets. And you take a look at some of these moves. GMDC, of course, one of those movers. And now the stock is at a record high. The stock is up 58% in the month of September so far. Another 11% added in today's session. We have had close close to 4 crore shares now change hands compared to a 20-day average of 90 lakh shares. And this 58% move that GMDC has had in the month of September has put it on course for the best monthly advance that the stock has had since May of 2009, when the stock had surged 70% that month. Now, even after this, the stock is about to turn double in 2025. It's up around 95-96% currently on a year-to-date basis, and this comes after a 20% drop that the stock had seen last year. The auto ancillary space is doing well, but just before we get to that, Bajaj Healthcare is the second one on the list. It's the biggest single-day gain since January of this year. It snapped a 4-day losing streak today. We have had over 14.25 lakh shares that have changed hands compared to a 20-day average of just 1 lakh shares, and this is broken above its 50-day moving average, which is at 461, and the next important level of the upside is the 100 DMA, which is still some distance away at 494. And another underperformer this year, it's down 17% on a year-to-date basis, but this 12-13% advance that the stock has seen in September has already made it the best month of the year so far. Spoke of auto ancillaries. Automotive stampings is the one, 15% higher on this stock, biggest single day gain since April of last year. The volumes are the highest in 2 months. We have had over 7 lakh shares being traded in today's session, and the 20-day average on this stock is just 15,000 shares. It's a Tata Group company, promoter holding at 75%, broken above its 200-day moving average of 538, but remains an underperformer this year, is down 15% so far. And lastly, Reflex Industries, we spoke about this in the morning as well, is extended its gain, snapped a 4-day losing streak. The volumes are the highest now since August of 2021. Over 1.5 crore shares have changed hands compared to a 10-day average of just around 2 lakh shares, and it's broken above its 50-day moving average of 390 after this move. And after quadrupling last year, the stock has been a bit of an underperformer this year, down around 19%. So Reflex Industries, another mover on very strong volumes.
Okay, all right. Thanks a lot for that, Harmas. Well, let's move to our favorite segment, D Street Chatter. Nimesh gets us an insight in terms of what he's picking up. Nimesh, take it away.
Hi, Nigel. A decent recovery from the intraday lows, and the volatility was expected because of the weekly expiry as well. But from a flow perspective, slightly a down day in terms of more selling than buying from larger FIs. So net it's going to be slightly on the negative side. But again, there are individual names and individual sectors which are outperforming. So today, the big outperformer is the metal pack. You highlighted the Nomura note as well. But in general, I understand there is buying interest back in the metal names in today's market. So that as a sector stands out. The index is up 100%. From a near-term range point of view, I think 25,200 on the downside and 25,500 on the upside seems to be the range for the Nifty. So having said that, there are a lot of individual winners in the broader market which are outperforming. So again, from a flow perspective, a down day, but there is a bit of momentum back in metal names and select PSUs as well.
Okay, what about stocks, Nimesh?
So the first on my list is BSE, Bombay Stock Exchange. That's been under pressure today. And in general, I'm getting a sense that there is a bit of supply coming in BSE. I understand a leading long-only fund seems to be an active seller in the last couple of days, and that's been the trend today as well. So that stands out on the sell side. The second name is Axis Bank. Within the private sector bank stocks, Axis has relatively outperformed the private peers in the last 1 month or so. And that's largely because initially there was a bit of buying interest from HNIs. Now it seems some large long-only funds and FIs are active buyers in Axis Bank of late. So that explains a bit of outperformance there. The third name, a couple of stocks where there is delivery-based selling today, Federal Bank and AB Fashion. Both stands out in terms of selling pressure from larger FIs. So expect high delivery volumes on both those names today. And the last one is BF Utilities. That stock is up 10%, big volumes as well. And again, while a leading HNI investor has been accumulating in the last many months now, but also for BF Utility, there is a very strong indication of some corporate development coming very soon. So that's the trigger as far as BF Utility is concerned.
Okay, thank you very much for that. Market's not doing too much, and we've got about 20 minutes to go before we wrap up trade. So let's get back to the big interview of the day, and that is with the JP Morgan CEO, Jamie Dimon. He says, United States should be India's best friend. Listen in to those comments. He was chatting with Prashant Nair at JP Morgan's annual conference. He also went on to say, Jamie Dimon, that he's optimistic of a resolution between India and the US. He said that the recent hike in H-1B visa fees has caught everyone off guard.
The president and your prime minister clearly like each other, so which I think is good. I don't know what derailed it. I do think the Ukraine, Russian oil has been part of it. So I would take the president at his word on that. I'm still optimistic. In fact, I think Scott Bessent or the president recently said, no, we're going to get something done with India, and I hope we do. I think it'd be very important.
How will this work out? Because I think the Indian side has been very clear. I'm not asking you exactly what happens, but there has to be an off-ramp, right? To knock those 25% off and then maybe work down the remaining 25% as well.
I'm not involved in negotiations. I don't know. Yeah. I do think they want to do something on the American side, and I think they want to do something on the Indian side. Yeah. And so I'm hoping that they resolve it intelligently. I think it'd be good for both parties. Yeah. And I think, India is a great friend of America. It should be. I know it's non-aligned, and it should stay non-aligned, but with their non-alignment, we should be their best friend.
And before coming in, I was watching CNBC, the squawk, and there was H1B, which was the big talking point headline. And it's kind of now sort of going into services as well, which so far it was not. It was mostly about goods. So is it expanding, or you think this is also all part of negotiation and it will finally settle down?
I think it'll finally settle down. That caught everyone off guard. And so we had a lot of phone calls over the weekend. What does it mean? And from what I understand, it means new H-1B visas. And a lot of H-1Bs go there because they need the expertise. And so I'm sure a lot of people will be going to the American government explaining why we believe it. I believe in merit-based immigration. As a matter of fact, I would beg the president, he has accomplished border control. That's great. I think all nations want real border control. That helps make a nation. But after that, we should have, good immigration. And I've heard him say publicly, more merit-based immigration, good seasonal worker stay, DACA stays. That if you get a degree in America, we should stamp a green card onto it. I agree with those kind of things, and so we'll hopefully be engaged in the government in this too.
The direction has changed in that sense. This administration coming in compared to where we were earlier, where we were going.
The administration is more growth, more pro-growth, but we haven't really attacked the fiscal deficit problem yet. Growth will do some of that. I don't know if they'll do all of it.
Okay. Yeah. Your call on the...
But the other thing about the deficits, and this is global. This is like every nation on the planet, and everyone's got very high debt levels too. I don't know when that becomes a problem. So, I can give you a logical argument that it can become a problem in 6 months. I can give you a logical argument it might be 6 years. But it will become a problem, and we're, like most problems, you're better off dealing with the problem than letting it happen. Yeah. And so I hope we are a little more thoughtful about that.
You weighed in strongly in support of the Fed when, we had officials from the executive making comments and sort of attacking the Fed, asking them to cut, etc. You think that's kind of sort of eased off a little bit, or how do you see this?
It'll start. I've always said that there's no American president who ever said, I want higher rates. So obviously they want short rates. President Trump has come out and said, I believe in an independent Fed. Yeah. He's quite strong about his opinions, but being independent is an important thing. The Fed is not really independent in other matters, supervisory, regulatory. I think there was too much of that, and they should have their ears cut back a little bit. But look, presumably, hopefully we'll pick a good Fed chair. Some of the names I think are quite good. I don't want to go through each one, and we'll see.
Weaker dollar, if I may so put it, is the strongest consensus right now. Do you agree?
I think there are... All things being equal, which they never are, you want a stronger dollar because it generally means a stronger economy. But now, tariffs, trade, and all these other things that have some counterfact. And, there are people who are reducing their U.S. dollar investments, which I expect will continue over time. So it'll add to a little bit of the weakness of the dollar. And there are a lot of people in the United States who like the weaker dollar because it's good for trade. So we'll see.
Artificial intelligence, Mr. Dimon, is the other one, right? Hundreds of billions of dollars being invested there. You think there is a risk of capital misallocation? It's a bit of a, I don't know if this is excessive, but...
So let me put it this way. AI itself is real. Yep. We have 2,000 people doing it, 500 use cases. I worry less about large models and small models and whether the costs will go up. I think the costs will be coming down. I think people are putting a lot of money behind it. So it is real. But in almost every real investment boom, you've had people who didn't do it right. So when cars boomed, a lot of car companies went bankrupt. When television boomed, a lot of television companies went bankrupt. When the internet bubble, that was real too. But I remember level 3 laid enough fiber optic. It took like 15 or 20 years to use it all. Yep. So parts of it may very well be in this kind of bubble thing, but parts aren't. So, but I separate that from the real, and we're going to be using it for a million different things. And so my mind is more than using it. It'll develop over time. We're using large language models and small language models, open source models and closed models, and whatever works best for our company and our client is how we're going to do it.
The U.S. itself, you think it's a lot of economists were saying that, well, recession in the second half, it's not happened. I mean, high frequency data, hard data is still coming in very strong. Combined with, maybe the loosest financial conditions we've had in a while. Just wanted your thoughts about how you're looking at the U.S. right now.
There's a lot of conflicting, data itself is not perfect. There's a lot of conflicting data. But right now, unemployment is still low. Consumers, both low end and higher end, are spending their money. At the low end, they're a little stretched. And credit losses are going up a little bit. So it's not a disaster, it's a weakening. I don't know if that's just a weakened economy or not. You have a lot of stimulus coming in the tax package, and you have a lot of, I'm not going to call it stimulus, but spending on AI. So a lot of CapEx is up, but it's almost all AI, data center related. So, I hope it continues, and I'm a little more cautious on inflation than other people. That may not go away so quick because of the global deficits around the world. Those have an inflationary effect. The remilitarization of the world, the restructuring of trade, those things are all kind of inflationary, and maybe, less immigration in the United States, could help push up wages in the United States a little bit, which is not all bad because, a lot of people, deserve a wage increase.
Okay, things are getting volatile now for the markets. The Nifty is once again below 25,200. We just attempted a recovery from midday lows of sub 25,100. We had gotten to levels of about 25,250, pretty much at where we had started. But once again, the markets are slipping. Remember, this is the Nifty weekly expiry. And now, while the Nifty Bank is holding up with a gain of about 250 points, you've got HDFC Bank down about 0.5% and ICICI Bank reeling, seeing some cuts. So that's weighing at an index level. And outside of that, a couple of these metal names are weakening. So Hindalco, JSW Steel, Hindalco is now dipped into the red. And then Sun Pharma, Tata Consumer, Cipla, too, are some of the drags today. But the other big story is that Rupee has hit a fresh all-time low of 88.8 against the dollar. And this is on the back of continued foreign fund selling and a weak sentiment after the US visa fee hike. Lata is now joining in with what she's picked up. Lata?
It is a big one-day fall of about 0.55% at its lowest when the rupee went to 88.80 versus 88.31, which was the last close. Actually, it started off lower, a good at 88.41. And when it broke 88.45, that was kind of a support. We had touched that point on September 12th. So it was seen as a support level. Once it breached that, then everyone was into scamper and buy dollars, importers, corporates, everyone, people who were sitting short or stop losses triggered. People were expecting some kind of a fall on Monday because of the H-1B visa news. But probably because of FTSE rebalancing, some flows came in. Finally, when the numbers came for Monday, it was a fairly big 2,900 crore of sell by the foreign funds. That also could have worsened the sentiment, which was anyways bad after the H-1B visa fee hike. The negative about that fee hike is that the expectation is that future remittances will be affected, but not the immediate flow, because it impacts only for the lottery, the H-1B lottery from next year. But nevertheless, that is a negative sentiment. Then we had the CEA himself telling us that the government and the Reserve Bank are not very upset by the rupee's fall because it actually compensates for exporters as well for importers. Steel stocks are up today. Why? Because, imported steel becomes expensive. It protects domestic industry as well. Finally, today was not only a rupee fall. Although the rupee is the worst performing currency this year, today the fall was also seen in the Indonesian rupiah and in the Filipino peso. And towards close of trade, as the dollar index fell a bit, some of these currencies, including the rupee, recovered a tad. The overall opinion is that all the bad news of the rupee is in the price, and probably either because of tariff news getting resolved or in the fourth quarter, actually some appreciation of the rupee is expected.
Okay, all right. Thanks a lot for that, Lata. Well, time to slip into a short break. On the other side, we have Jayapal of Cash the Chaos, who will be joining in.
Welcome back. After 2 days of losses, the markets couldn't make quite headway on the way up. We were trading in the green in the morning and sometime about 20 minutes back. But in the last 30 minutes, markets have dipped once again and now 36 points lower. Jay Bala of cashthechaos.com is now joining in. Jay, what are your thoughts on the markets just in the near term and the recovery that we've seen in Nifty Bank?
Hi, Rima. Thanks for having me on the show. See, I'm bullish on the markets, but as long as the markets aren't able to 25,669, it's a worry for me. The markets crossed the 25,400, the short-term resistance, and then it's pulling back. The bulls still have an advantage, but if the Nifty were to drop below 24,800, 24,750, the thin advantage that the bulls hold, that will be lost. So I don't want to see the markets below those levels. And the Bank Nifty is doing well because, like I pointed out last time, SBI managed to close about 837 and it's at 870. And is very likely to push towards a fresh 52-week highs at about 905 and odds. But unfortunately, the benefits the banking index is drawing from SBI is being offset by ICICI and HDFC Bank.
Okay, all right. Hi, Jay. Good to see you in. What about the tech index? You're enthused by it? You believe that it could bounce from here?
Yeah, as long as 34,200 holds for the Nifty IT index, it's a good sign for the Nifty IT index. Despite negative news, it's managing to hold the critical support. But it's tested that twice and managed to bounce from there. I shouldn't go back there one more time. It'll weaken the support. So I would like the Nifty IT index to cross 3,800 really soon. Then it'll make an attempt for 43,000. So it's a bit of 50-50 at current juncture, but the odds are very slightly towards the markets the Nifty IT index holding about 34,200.
Do you want to take us through some stock calls, some recommendations?
Yeah, please understand that the markets are at a very advanced stage of move from the April move. So you might want to position appropriately. I have two picks, one from the real estate and data center space, that is Anant Raj. I have a stop loss at about 511, and at current levels, it's moving, looking like it's likely to move towards fresh 52-week highs about 950. So around 660, you want to buy about 10% of what you want to buy, and then if the stock were to pull back about 625, 600, then you want to add. So go a little bit easy here. The second one is Anvolia contracts. Again, very interesting setup on the medium term and the short term. Stop loss at about 870 for a price subject to 1560.
Okay, all right. What about the metals pack?
Yeah, I'm bullish on the metal space. Besides the auto index, which has clocked fresh all-time highs today, the Nifty Metals Index is looking positive, but not as positive as the Nifty Auto Index looked a couple of months back. But if you look at something like Hindustan Copper, it's probably making a march towards 400 plus. You want to keep a stop loss at about 275.
Okay. On the global picture, you believe the US markets, which have had a fantastic run, we're in the late stages of the bull run. Is a correction imminent?
That's right. If you look at the NASDAQ in particular, the momentum is quite strong. But looking at the price structure from the August low, it probably has got one final sequence of higher high to come through. If the index were to pull back, that will be the penultimate leg of the move from the April lows. I'm anticipating the S&P to hit about 6850 and start a correction. The NASDAQ spot index to hit about 25,000 thereabouts and then start a correction. It's in the late stages of the move, but still there is no sign that it's stopped. But my analysis is that it's very close to coming to a corrective top. But once the correction is through, it will probably see a year-end correction, Q4 correction, and then the bull run will resume in 2026.
Okay, very quickly on the currency space, what are the levels you're looking at?
Yeah, in the Indian rupee, like I posted on my Twitter handle in June that it's likely to scale 89 against the dollar, and it's doing that. 89.5 is a very important resistance, and we have one final push towards 89.5 possible. When it comes to the dollar index, it's possibly put in a short-term bottom, if not a medium-term bottom. and the dollar index is likely to rally to about 103. On the Fed day, it made a fake out low below the July 1st low. And this is signaling that there is a possibility that dollar index is likely to rally somewhere about 102.5 to 104.9.
Okay, all right. Thanks a lot for that, Jay. Just stay with us. You know, the markets forward team as well will like to have a chat with you. But let's start winding down. It was a dullish day, actually. We had a weekly expiry as well that did play out. No respite for some of these tech names. Your Tech Mahindra that was lower in today's trading session.